If you're military connected, you have earned the VA loan benefit, and that's one of the things that gives you a huge advantage in real estate investing over the average civilian. A couple of things right off the bat that you have access to is you are naturally more geographically planted in areas that are market resilient because of high population and high turnover. Another thing is that you typically can enter the market with $0 down payment. There are many other advantages and benefits, which I am teaching in this video. This is Home Buying 101 for military families. I'm going to go through equity and why you should use your basic housing allowance to invest in yourself and in your family. And then I'm going to cover 7 steps to home buying and talk to you all about how you can use each step in that process to get into a home with little to no money at all. I'm Kimber Hill. This is my military spouse lifestyle show where I cover how to thrive in military life. I talk about things like real estate investing, remote work, and military benefits. Enjoy the video. Hi, everybody. It's Kimber. It's really nice to see you. We have a ton of people packing in. All right. I'm seeing over 100 people here right now. This is Home Buying 101, and I've got a lot to get through with you. So if you are a service member, if you are a spouse, if you are dependent, if you are military connected in any way, this is a good class for you. I'm taking you through 7 steps. And what I want to make sure that we start with is the foundation. Buying a home is really crucial for anyone. But for military families especially, there are a lot of pitfalls for military families. So I want to make sure that as a military spouse who's done this 6 times, I want to make sure you have the right people set up in your corner. And those are just my own 6 personal transactions. Okay. I'm not talking about all of the military MLS clients that we've helped. I'm talking about just me personally. I have made a lot of errors, and I want to prevent you from making them. So that's why we developed this. But most importantly, I want you to know that the military MLS is your team. We are in your corner to make sure that you have the right service providers to help you. This is a community. You guys know that I built VirtForce, and it is a community that helps military spouses find remote work. And in 2023, we built the Military MLS. This is our concierge style community that, in the same vein of how we built our sister community, it's built by military spouses for military families. So right now we're going to put the link in the chat to the Military MLS. If you have not created your membership for the Military MLS, go ahead and take a second and go over there and create your membership. You will be able to list properties there for free. It's a forever free platform. You will be able to browse properties there for free as well. The site is relatively new. It's still growing, but if you don't have your membership, you can go ahead and set it up. This is our forever free place where we will be able to support you now and in the future, finding properties, finding rentals, etc. But what do we do at the Military MLS? What we actually specialize in is setting up a personalized game plan for you and your family based on what you want your real estate investment strategy to look like. So you, as a Military MLS member, can book a strategy call with the Military MLS concierge to plan out, when are you PCS'ing? When are you leaving the service? Have you already left the service? What remaining VA loan eligibility and what remaining VA loan benefits do you have? The concierge will answer all of those questions and then walk you through, hey, this is option A. This is option B. This is option C. And I see some of you who are on the call today, we've done this with before. So you can nod your head yes or no if you've been through it and if it was helpful for you or not. But you get to walk away with clarity around the options that you have. Go back to your family and your spouse and talk about like what is going to be best for you. And the Military MLS concierge will be there with you every step of the way. So you get to walk away with that personalized roadmap. And that's where that happens in the strategy call. And I'll go ahead and get Katie to drop a strategy call link. We are giving away Stanley tumblers to everyone who books a strategy call. When you are ready to take the next step, the Military MLS network of realtors and network of lenders is who we like to connect you with. And I have one of our very special and meaningful lenders here on the call today. We have Ashley, who's my go-to at Trident Home Loans. Ashley, can you pop off mute and tell us a little bit about yourself and who Trident is?
Yep, my name is Ashley Barber. Trident is a veteran operated and owned company. We're based out of Pensacola, Florida. Trident was founded in 2007 by Marty Medvey and Tim Moore. Both are Navy veterans. When I started with the company in 2012, we had about 5 employees. Since then, we've grown to almost 100, which includes our outside loan officers. We're a local company, but we support our clients nationwide.
Okay, I have a video we're gonna play where I'm gonna introduce you to Marty.
At Trident Home Loans, we do things a little bit different because we have your best interest at heart always. For the last 5 years, I've been America's #1 veteran loan officer. I am a fellow enlisted since 1981. I'm a Naval Academy graduate. I'm a former Navy pilot. I'm currently an airline pilot and I live here in Pensacola. And our mission is to support you to get the best possible rate and service on a VA loan, and we do quite well doing that based on our reviews. So how it really works with us is you're not like a customer. You're like a fellow squadron mate. You're like someone who's a comrade in arms. And that's how I grew up in the military. For the 14 years that I spent in the Navy, I always felt like the people that I met and trusted were comrades in arms. My business partner, Tim Moore, was phenomenal in supporting me to get my current job at the airlines. And we were roommates at the training command. And we've always remained with the same purpose in life, and it's to help you get the best rates through the VA loan or otherwise. Trident has a different ethic with how we do loans. We offer the best rate up front that we can offer with lower margins. We have tremendous customer service, and I'm personally accountable and available if there's problems along the way. Or if on the rare occasions with one of my employees, I'm more than happy to help step in and help communicate things to make things better. We treat you with respect. We treat you with someone who we would want to work with and be in a squadron with. And if we don't do our job correctly, we don't win and we don't get you to refer loans to us. So as America's #1 veteran loan officer who isn't enlisted, who was a former officer, who was a former Navy pilot, I do my best to treat you with the respect that you deserve as a fellow veteran and as a fellow disabled veteran. Our reputation is unsurpassed nationally. Realtors, lenders, business professionals know that Trident has the best reputation in the United States for doing VA loans. Our investors do as well, and we maintain a standard that's second to none. That means that you get the best customer service from us, and you have a friend in the mortgage industry who's not trying to make the most off of you on every single loan. What's the difference between Trident Home Loans and some other lender? Is it the rate quote up front that's not really trying to fish for dollars? Is it the communication with a dedicated setup assistant from the very beginning? Is it a dedicated closer at the end that listens to you and that meets your needs to extend the loan? Is it somebody who looks out for your best interest during the process in case you get in trouble? Is it a company that 9 months down the road will offer to refinance you and pay closing costs when rates drop? And is it somebody who you would trust your son to, or somebody who would trust your fellow squadron mate to, or somebody who you would trust who works with you in the same battalion or ship? And I win on all those categories because I have that belief that I am that person who is ethical and honest and will do those things for you. It's not always about making money with us. Sometimes it's about taking care of the client. And if we make a mistake, we're accountable, and we will compensate you if there are issues and problems.
I met him accidentally, and I do not believe in coincidence. I feel like it was completely fate that I ran into him because we were building this platform for military spouses and military families. And I've been looking for the lenders with the lowest rates. I've been looking for the lenders that will do the most for the community. And I accidentally met this guy at an aviation event, actually, because my husband is in the aviation community and Marty is connected to it. In running into them, what I have found is Marty is one of the co-owners of the company. He's also a Delta pilot, which is why he can't be here today. He's flying for Delta. What I have found is 80% of their business is in the VA loan space, and they care so much about the military community. They have the lowest VA loan rates that I can get in front of you. Okay, so that's why they're here. Also, they've been very good friends to the Military MLS since we met a few months ago. They've helped many of our Military MLS members go under contract. on average about 1/4 of a point less than what any other competing lender is offering. So I asked Ashley to be here with me today to teach Home Buying 101 because the entire 7-step home buying process is this dance. It's the dance between your realtor, it's the dance between the lender, it's the dance between the title company, and it's about a 45-day group sprint that they all do together. So I asked her to step in today to help teach this with me. So thank you so much for being here, Ashley.
Thanks for the invite.
Yeah, no problem. I will say right now, if you already know that you need to speak with a lender and you want to talk to Ashley and Trident and see what their rates are for you and your family, go ahead and book a strategy call. Katie, could you put the strategy call link in the chat for me? So anyway, basically, if you already know, you don't have to wait until the end of the call. You can sign up here. Ashley and I have talked about actually doing all of the strategy calls together. Normally I do those alone or with Cassie, who you can wave Cassie if you want. Normally me and Cassie are doing those, but Ashley and I have already discussed doing the strategy calls together. That way you get your real estate questions and your lending questions answered at the same time. So you get your little preferred PCS plan. And she said, you know, if you don't need me on the call, I'll just go on mute and step off. So you can go ahead and book one, and there is your link. Yeah, up and down. Yes. Home Buying 101. So how many times have you used the VA loan? Half of you have never used it. 30% have used it once, and 23% has used it 2 or more times. I've used it 4. So it is one of those things that you can wash, rinse, repeat, wash, rinse, repeat. Are you a real estate agent? We have 5 real estate agents on. Welcome to our realtors. You guys can wave your hands if you like. Would love to see you. We have 90% of you, 60 are here to buy or sell. And then we have our lender on. That might just be Ashley, or we might have one other lender on the call. We'll see. And how long until your next PCS? Wow. 22 of you guys are on the same PCS timeline as me. I'm PCSing in April. Deep breath. Woosah. We'll get there. We'll get through it. 1 year and 2 years. And do you currently have a VA loan? No. Yes. And we have most of us kind of falling into the no category, but about half of us who might have more. And the 6%, we're asking you your interest rate there because rates are due to drop. We'll let Ashley speak to that later, but we are expecting rates to drop this year. And at the end of this call, we're going to talk about refinancing and how to IRRRL to make sure that you are taking advantage of the lowest rates as they come in. All right, you can close that poll and let's get going. So let's start with buy versus rent. I think a big component before we start these 7 steps is you've got to sit down with the stakeholders and the decision makers in your family and decide, is it right? Is it the right time for me to buy? And when is it the right time for me to buy? What conditions need to be met? I want to preface this conversation with buying is a great way to build equity. And I want to take a moment to define what equity is in case you're not familiar with the term. When you buy something like real estate and it increases in value, but the longer you own it and the longer you make payments on it, the less you actually owe to the bank, but the more it appreciates in value. That is kind of the concept of equity in a nutshell. When you buy a vehicle, it begins to depreciate. It is a liability. When you buy a home, if it's a new construction, it starts its journey of appreciation. If it's not a new construction, and let's say it's 20 years old, you can actually look back into the history of it and see how it has appreciated year over year. And you will see that maybe in 1980, it was worth $90,000, but today it's worth $300,000. So that gives you a history of appreciation on the property. It's going to continue to appreciate year over year. So equity is your appreciation, but your debt and the amount you owe on the property is going down while your appreciation is going up. So equity is the amount of profit you have, that invisible profit you have in the middle. Does that make sense? If anyone has questions on equity, you can drop them in the chat and we'll do our best to answer them. So one of the things that I want you to know about equity is the average home in America is going to increase by about 1.5% to 3% in value every year. And so, for example, if you purchase a home right now at $250,000 and you hold it for just 10 years, only 10, it could be worth around $305,000. And that's conservatively speaking. That's conservatively speaking on the lower end in just 10 years. Okay? For example, I'll tell you my personal numbers of my first home that I ever purchased it for $200,000 in 2019. We are about 7 years into home ownership on that property, and it's worth about $315,000. So that home, I have over $115,000 in equity in. What's interesting about being a military family, especially if you're active duty, is you have the basic housing allowance. And a lot of us are in the position where we're giving that basic housing allowance back to the government every month to rent, or we're giving it to someone else to pay their mortgage. If that's you, if you are living on base, put a thumbs up in the chat so we can just see who here is still living on base. And if you are already building equity and you want to share, so some of you are already homeowners, and I want to do this so that our on-base people can have a little bit of inspiration from our people who are already investing. Okay, so if you are already investing, you already own a home, and you know about how much equity you have, if you're comfortable, drop that number in the chat, and let's give our on-base friends a little bit of encouragement and inspiration here. If you don't know the number, that's okay. You can just give us like a green heart or a green money sign in the chat so we can see who is building equity. Thank you, Jennifer. We appreciate that for sharing. All right. Kelly says 120K. Evelyn doesn't know, but she gave us a green heart. Francis, $500,000. You go, girl. Angelina, 400,000. Christina, we're getting the hearts. So on base people, I want you to see this is totally possible. And we just need you to take that baby step to get there. I never planned to have $115,000 in equity out of my first purchase, but I can tell you one thing, I'm excited that it's there and I know that it's going to benefit us in the future. All right. So 3 other things before we launch into the class, or the 7 steps. We're already in the class. Sorry, I keep saying that. 7 steps. You need to know these 3 things that make you a naturally strong investor that nobody else has. And you only have this because you're military connected. Number 1, as a military family, especially if you are active duty, you are typically naturally planted geographically in densely populated areas with naturally rotating populations. What does that mean? It means that the environment in which you are stationed is highly favorable for a real estate investment. It's highly resilient to market recessions. And you also have the VA loan, which is point blank a cheat code for real estate investing. It is the cheat code, okay? Let's talk about why. I'm gonna bring Ashley on. Ashley, tell us the VA loan in a nutshell. Can you give us just the top line basics that everybody needs to know?
Yep, super bare bones. It's a government-backed loans. It's specifically for those who have served in the military. It is a VA guarantees the loan. So that basically means instead of you having any type of mortgage insurance or having to have a higher down payment, the VA guarantees it. So if anything does happen and you default, then they cover your default in the loan. Other loan types can't offer that. So it does make you a stronger buyer whenever you're going to present offers or just in general.
Thank you. So you earn this benefit. I want to be clear. This is not, it's not just being given to you. The fact that you served or your spouse served, you've earned the benefit. And that's why it's important for you to take advantage of something that you've earned. You can use it multiple times, but the big thing here is 0% down payment. How many of you here have looked into real estate investing and thought, gosh, I'm going to have to bring a 20% down payment to the table before I can buy a house? If that's you, throw a hand up, give me an emoji or something. That is not the case with the VA loan, okay? You can walk into a house for free in some cases, no down payment. If you work with the right realtor, you can get your closing costs covered. If you find the right opportunity, you can get cash back at the table and walk into a property that all you have to do is 30 days later start making mortgage payments on. So it's totally there and possible for you. Ashley, let's talk about the difference between the down payment and the cash to close.
Yes, it is very important to know the difference between the two. A lot of times we hear people where I mentioned in our discussion that you have to have cash to close, and they're like, whoa, 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 I thought it was no down payment. There is a difference between the two. So we want to make sure, we're going to discuss it more later. So we want to make sure what you guys know the definitions of what we're talking about.
Okay, so you can write down cash to close, down payment. Those are two different lump sums of money. We'll talk about them. There are strategy. The down payment is typically already going to be zero. And then we have lots of strategies to help you get that cash to close down to zero too. All right. So write that down. Let's go ahead and jump into the definitions behind down payment, cash to close, and closing costs. Ashley, I'm going to pass that over to you. Can we start with down payment?
Yes. So the down payment is going to be the money used to reduce your loan amount when purchasing your home.
Right. So if you bring $5,000 as a down payment to a $400,000 house, then your loan is only $395. Right. So that is the down payment. Now, what about cash to close?
The cash to close is going to be the total amount of money that you're going to need on the day of closing. So we're going to go into that in a little more detail later.
Okay. And then closing costs.
Closing costs are the costs and fees that are charged when getting a mortgage or closing on a home. Some of the examples can be lender fees, appraisals, credit reports, third-party fees like title, your prepaids and escrows, which are your taxes and insurance.
Okay. We're going to dive into this a little bit more later, but in a nutshell, your cash to close is going to include your closing costs. Your closing costs are basically the fees that are being paid, and the cash to close is going to encompass closing costs as well as anything outside of fees being paid to do the transaction. But what I do want to say right now is I want to make sure that we all understand that the reason why I brought Trident onto the call is because their closing not only is their interest rate for VA loans the lowest interest rate for VA loans that I can get in front of you today, but also their closing costs are the lowest. As a matter of fact, Ashley is waiving about $2,000 of closing costs just to work with them. Why are they doing this? I'm going to play you a video at the end of our call today of Marty kind of explaining why. But closing costs are effectively a way that mortgage lenders and banks earn more money off of the transaction. And Trident has kind of declared this is not very important for them. Their focus is serving the military community. So Ashley, can you tell us what closing costs are actually waived by Trident?
Yes. So if you close a loan with Trident, Marty has agreed that he will waive your admin or underwriting fee and the appraisal fee. So the underwriting fee or admin fee is usually around $1,350, and the appraisal can be about $750. It really depends on where you live for the appraisal.
Yes. So that's around $2,000. So just right off the bat, if you're looking at lenders, you're going to be looking for the lowest interest rate and who's going to give you the best deal on your closing costs. And I'm telling you right now, I want you to start that conversation with these guys because they're going to give you the best rates. What do you mean by close a loan with Trident? I'm not sure what your question is, Mandy. I do know that we're going to take a few question breaks throughout. So you guys keep putting your questions in the chat and my team is collecting them. And then we're going to kind of answer them all in bulk. All right. So in a nutshell, I'm just going to recap that because I paused to take a question. In a nutshell, working with Trident could mean if you're borrowing with them, you could be saving around 0.25% on your annual interest rate or your interest rate, for your mortgage, and about another $2,000 in closing costs. So if this is feeling like good vibes for you and you're excited to be connected to them, give us a thumbs up in the chat. Would love to see who's excited about that opportunity. And if you want to meet with Trident, remember Ashley's going to be doing the strategy calls with me. And you can go ahead and book one of those at your convenience. And Katie can put the link to do that in the chat. All right, let's start with step number 1. I'm seeing some thumbs up. Thank you guys. If you're ready to move into step 1 of the home buying process, drop a 1 in the chat and let's get going. You need a plan. So step number 1 is devising your plan of what's important to you. And we have strategy calls almost every day of the week. And in the strategy call, I talk to families about every different situation you could possibly imagine. I'm not kidding you. Everybody's situation is different. And that's why I can't get on this call with you and say this is one size fits all, because it's not. You could come to me and say, I am just looking for a right now property, and I'm going to be getting out in 18 months. I'm going to be getting out of the service in 18 months. And then tomorrow that could change completely, where you've decided to stay in for another 5 years. And now we're shifting gears from a right now property to, I need to plan my next 3 purchases over my next 3 duty stations. Okay. So what I want to impart to you here is to set up a call with our concierge. Katie will put the link in the chat, but what we're going to do with you is we're going to discuss your options to buy and sell. We will compare short-term games that preserve the current basic housing allowance you're getting now to other strategies like buying, holding, renting, and long-term gains. We'll also discuss like what properties are right for you. And this is all very dependent on your career, your lifestyle, how many people are in your family, how many incomes do you have, what your debt to income ratio looks like. But we'll look at properties like, could you consider a multi-unit dwelling? Are you interested in buying a home that you could rent and sell, that you could buy and sell? Or are we interested in buying a home that we can buy and rent? Are we interested in house hacking and like taking a home and dividing it into 4 different units and 4 different tenants? Like where is your interest level and what's going to work for your family? We go through that in the strategy call to help you get set up for success. The other thing that we really, really focus on is, if you're currently active duty, how many more PCSs do you have? And when does active duty service life end for you? Because your VA loan benefits change when you get out. Actually, they change 12 months prior to when you exit. So if you have an exit coming up, type exit in the chat so we can see who you are. If you have an exit coming up, the way that you use the VA loan will be different from how an active duty service member uses their loan. And that changes at the 12-month prior mark. So that's why you need a strategy call. I cannot tell everybody the one size fits all scenario, and neither can Ashley. So feel free to book a strategy call with us and let us talk to you about what's going on. The other thing that you need to know is how to avoid smoke and mirror marketing, because a lot of people like to advertise to military members. They like to talk to you about, we have the name veteran in our branding, or we have the name Navy or Army in our branding. And because of that, you should trust us. We have your best interest at heart. But what we teach you on the strategy call is, this is picking your lender, picking your realtor. You're actually shopping and you're hiring. You're shopping and you're hiring. And we teach you what smoke and mirror marketing tactics to avoid. I won't go into that now. I've done that on my VA loan bootcamp classes. We just did like a whole semester of VA loan bootcamp classes, and I have those recordings if you want to review them. But also we can talk about that in the strategy call, how to help you avoid pitfalls. And then Ashley, let me pass it over to you on this one too, because I know you have some things to share about clients who you've helped in like different situations. And it always takes that first initial strategy call to get to the bottom of what they need.
It does. I think the strategy call is important to help you understand what it is you're looking for, not just for today, but long term. I have multiple different families that own 5 or more houses. They look at the rental payments as their retirement plans. So once they retire, that rental monthly income, that's what they're going to live off of. So that might not be right for you today, but it might be something that you want to look into for the future. So I do strongly suggest that you guys call the Military MLS, get your advisor, figure out what's best for your family, get a clear vision, and take the first step.
Awesome. Thanks, Ashley. Yeah. All right. So let's go ahead and move on to number 2. Let's see here. After the strategy call, so we're on step 2 of 7. After the strategy call, you should be leaving that meeting with me and Cassie and Ashley. You're going to be leaving it with like a clear game plan. You may need a night to sleep on it, or you may need a week to talk it over with your family. Whatever. You've got the options. You've got the blueprint. Once you have your blueprint, you will then actually start a relationship with a lender. And then candidly, I often see a lot of our members are afraid to initiate conversations with a lender, and they're like hesitant to do that early. But I'm going to be honest with you, that is where it starts. And if you don't start there, you are setting yourself up for failure. I'll tell you like a recent story in a few minutes of exactly how, but that's where it starts. And you can't start a relationship with a lender too early. So here are some facts. If you're taking notes, I want you to write these down. Facts about selecting a lender. Number one, your lender determines what you're approved for. So unless you had a millionaire or billionaire uncle die and leave you a ton of money, most of us are going to be financing, and most of us are going to be financing with a VA loan. But meeting with the lender will actually inform you and your spouse of what your actual budget can look like. You know, you may see a home that you love and it's $300,000 and you're thinking, I think I can afford that. The lender will actually look at your debt to income ratio, look at your income and tell you, yeah, you could get approved for that. Or no, your budget's going to be more in the 250 range. Okay. Number two, the lender, a good VA loan lender should be your friend, someone you can reach out, text message, email quickly and get quick answers to. Number three, you are looking for a lender who understands the VA loan guidelines and understands that they are super, super different from FHA, DSCR, and conventional and other loan types. They're very different. So other lenders may not know what an LES statement is. They may not know what the VA loan appraisal process is. They may not know how to handle VA loan tidewater, which is reconsideration of value. And if we start with a lender who doesn't understand these things, you may end up like me, homeless for almost 14 days because my lender could not close me on time. And that's when, in my example, I fell for one of the smoke and mirror marketing traps and just went into a brand that I thought had my best interest at heart because they had the name Navy in their branding. So let me be clear. Small businesses can do the shorter timeline closings. Small businesses, like veteran-owned businesses like Trident, they can handle these things and they know them. Like I said, I think Trident's VA loan business is 80% of their business. And I also think I was talking to Ashley and she told me recently she closed a home loan in 15 days. Can you imagine asking a big brand to do that? It would not be possible. All right, so does everybody have those facts jotted down? If you got all of that written down, can you drop a smiley face in the chat for me, please, so I know we're good to move on? All right, seeing lots of questions. Okay, seeing smileys, so everybody got those. Let's keep going. So I know, like I said earlier, a lot of people are just kind of in general afraid to have a conversation with a lender, and I don't want you to be afraid. So let me just pull the curtain back here. Ashley, can you tell our Military MLS members what actually happens when they just call to have a conversation with you?
Yeah, I think it's exactly that. It is a conversation. I think oftentimes people are scared that, mortgages are scary in general. So they don't know what to expect. They're scared about it. So it is your financial picture, but all it is a conversation. I do mortgages every day. I also tend to talk fast. So, if you need us to slow down, ask me to slow down. But you may have only purchased one home. You may have purchased 5. You may have purchased none. I'm going to ask questions that you might not even think about. One of the things that I say every day is you don't know what you don't know. And that is very, very true. So our conversation is going to make sure that you don't fall in love with something that you can't afford or get approved for. Or if you have been approved with somebody else and they told you that you can afford $600,000, but maybe after we have our conversation, you really don't want a mortgage payment that high. So it's finding out what you truly want and need versus what a lender can say you qualify for as well. That's part of the initial budget and establishing the relationship. I always say that I'm not going to put somebody in a home or into a mortgage that I wouldn't put myself in. I just ethically, I just can't do it.
Yeah. Thank you for sharing that. And I told you guys I would tell you a story briefly. We had a Military MLS member recently that started with their realtor match and selecting homes before they met with a lender. And what did that actually do? They fell in love with a house that they couldn't get qualified for, but they already had put an offer in on it. So essentially, after going into escrow on that property, not, with their earnest money deposit, they then had to make the decision to stick it out on that property and start trying to shop multiple lenders and bring in family members who could help them co-sign on the loan or walk away and leave their earnest money on the table. So they decided to stick with the property. It did take them almost 90 days to close. And so for the duration of that time, they were living in the on-base hotel and getting moved around from room to room with multiple children. And it put a lot of stress on that family. So that's just an example of, if you don't start with understanding your budget and where you need to be, what could actually end up happening. Okay, so let's keep going. I do want to say this because a lot of people are hesitant to speak to a lender. Let's clarify. Do you think that calling a lender is immediately going to have your credit pulled? I think a lot of people ask that question. If I speak to the lender, are they going to pull my credit? Ashley, can you talk about that?
Yes. And the answer is no. We do not automatically pull your credit. So we have different qualifications that we can do. We can either do a pre-qualification or we can do a pre-approval. The difference is a pre-qualification is where I go in and I see where you stand based on what you put in your application. It's your income, your assets. We might do a soft pull on your credit. It doesn't actually hurt anything, but then that does give us a better idea of where you're at. If you don't want us to do a soft pull, that's okay too. We can still have the conversation. A pre-approval means that I've looked at your actual physical income, your assets, and we pulled a hard pull on your credit. And I ran you through our automated underwriting system. If you're looking to make an offer on a home, the pre-approval is the stronger of the two options. Ultimately, this is your license to shop.
Absolutely. So I see our military MLS members comfortably getting the pre-qualification about a year in advance. And then when we're in that 90-day window of we're ready to make a purchase, then we're just calling Ashley and saying, hey, go ahead and process the pre-approval. And that way you already have an established relationship with them. You already know what to expect. You've already done the pre-qualification. You submit a little bit of extra paperwork to her and her team, and they do the pre-approval. When you have the pre-approval, you have the license to shop, which means we are ready to move on to the next step. If you guys want to move on to step 3, drop a 3 in the chat, and let's see who's ready to get into number 3. When you have the license to shop, you're ready to meet with the realtor, okay? You can start before you have the pre-approval. I'm not saying that you can't. A lot of people do the pre-qualification a year to 6 months with the lender. Let me clarify. A lot of people do the pre-qualification with the lender a year to 6 months out, and then they connect with the realtor, and then they start shopping the properties with the realtor. And when they get more serious about putting in an offer, they have the pre-approval. However, it is equally as efficient to just connect with your realtor when you have the pre-approval. So basically, a military connected realtor is super important. Cassie manages our full military MLS referral network. And what we do is we vet every single realtor in our network. So we're looking at a lot of different factors. How many VA loans they're closing for purchases every year is super important to us. Every realtor who applies to be in our realtor network goes through an interview process with us, and we also understand how many tidewater circumstances they've experienced as well, and how collaborative they are to get the VA loan closed. So I'm going to talk to you about a few things that you need to keep an eye on when you're hiring a realtor. I will say, first of all, Cassie is your go-to for helping get matched. The military MLS is your go-to for getting matched with a realtor in your geographical area who's going to know how to support you. But I want you to know that the realtors we're connecting you with, they know your base and they know your geographical location inside and out. And this is why it's important to have the strategy call and meet with the lender before, because if we talk about in your strategy call potentially putting you in a multi-unit property, and then you go meet with the lender says, yes, you can afford a multi-unit property, here's how much you can lend, then we're gonna match you with a military MLS realtor who's experienced in multi-units, who specifically focuses on that. We're helping multiple people out in California right now work with a military connected multi-unit realtor who's helping them find the right investment properties for them. So that's why it's super important for us to know what the game plan is, what we can afford, and then we match you with the right realtor. So if your goal is to rent, we're going to match you with a realtor who can help you pick the most rentable properties and who will be comfortable running those rental comps for you. So you can project out, okay, if I purchase this in 2 years when I'm ready to rent, how much am I going to be making on it? And the realtor is going to be helping you run those numbers. So the realtors in the Military MLS network also have this kind of key differentiator. They know the VA loan process, which includes how to handle and manage WDO inspections. You can write this stuff down. VA appraisals, and they're going to work with the lender to get you to closing on time. So you can expect your realtor to do these things for you. They should be setting up custom searches for your market. They should be able to answer any and all questions about the properties that interest you. They should take you to view properties. They should be prepared to evaluate the financials of the properties in conjunction with your lender, in cooperation with them, the properties that you like, to determine what their resale and rentable value would be. And they should also help you ensure that your best interests are protected during the full purchasing process. So in a nutshell, you can expect a Military MLS realtor to do all of these things that I just said, but also be an expert at managing the VA loan process in collaboration with the lender. So they're going to ensure that you pick a home that the VA will actually agree to finance, because the VA has standards, and we're going to talk about those in the next step. The VA has standards on what they will and will not allow you to buy. So they're also going to help you make sure that you pick a home that's marketable if you want to sell it or rent it in the future. So if you want to learn more about the Military MLS realtors, you can schedule a strategy call with us, and I'll go ahead and answer your questions about them. Making an offer, baby. This is the fun part, right? So effectively, steps 1 through 3, you've built your plan and you've built your team. Step 1, you built your plan. Step 2, you found your lender. Step 3, you found your realtor. And you also know what those people should be doing for you. I also want to make it very clear that you have the choice of who you work with. If you're not happy with the service that you're getting, you know what to look for and what you should be expecting out of a lender and a realtor. Okay. Step 4, you have the plan, you have the team. Now you found the house. So after you partner with the realtor, you have your pre-approval, which is your license to shop. You're going to see houses. Chances are you're going to find one that you like, babe. One of them is going to really tickle your fancy and you're going to be like, this is the house for me. It's time to make an offer. So when your agent is preparing the offer, now I have had agents, personally, I have had agents before just kind of look at me and stare and be like, what do you want to offer? And I'm like, I don't know. You tell me. You're the realtor. You should find an agent that's comfortable talking about those things with you. Okay. We want to make sure that we're in an agency agreement with them that makes it clear that they are allowed to legally advise you on what would be a good rate for the house. So some things that the agent should be comfortable discussing with you are prices and negotiation strategies. Okay. They should be able to, first and foremost, provide you a comparative market analysis on the house that you have selected, which shows you, hey, this is the asking price for the house. They're asking $465,000, but the house down the street has the same floor plan and the same bedroom count, and it just sold for $425,000. So what does that mean for you and your offer? You have to ask your agent, okay, does that mean I can offer $425,000? What is reasonable and fair here? So they're going to know things about the comparative market around you to help you identify how much you should be offering, okay? And the big thing that I want you to take away from this call is the word concessions, okay? So you can write down concessions, not like the concession stand, but just CONCESSIONS. This is earlier, you remember how I said you have down payment, which should be 0. And then you have closing costs and your cash to close, which we have strategies in which we're going to try to lower those down to 0. This is one of the ways that we accomplish that. The other way is having a great lender like Ashley, who will waive some of your closing fees. This is the second way, which is having a great realtor who will go to bat for you and ask for concessions in your offer. All right. So let me talk about what they are. Buyers can ask sellers, you, the buyer, can ask the seller to pay buyer's closing costs. And you don't always phrase it as directly as I want you to pay my closing costs, because sometimes indirectly is better at the negotiation table. Okay. So the way that we ask for that is we say, would you please provide concessions? And this is typically written into the offer. The offer is a legal and binding contract. All right. So when the offer is written, it's prepared by the realtor. And I'll give you a couple of examples. So you've heard the terms buyer's market versus seller's market. There are ways to get concessions in both a buyer's market, where the conditions are more favorable to the buyer to make the purchase, and the seller's market, where the conditions are more favorable for the seller to sell for a higher price. So in the buyer's market, if you make any offer that is fair for the home, even including asking price, it is fair for you to include, I would like concessions in the terms of that offer. I am typically seeing around 1% to 3%. So in a buyer's market, where a lot of realtors and a lot of buyer strategy is, I'm not paying full price. I'm not paying full price for that home. I'm going to undercut. I'm going to try to come in as cheap as I can. I want to get this home for as cheap as I can. I'm going to make them an offer at 90% of their for sale price. Okay. Well, that just means what you're financing is 90% of what they asked for, which, Ashley, how much would that actually lower your monthly payment? I know I'm putting you on the spot.
It's surprisingly not as much as you would think.
$50?
Maybe. Yeah.
It might, undercutting the price of a home might actually save you around, by 10%, might actually save you around $50 a month over the course of 30 years, which I'm sure if you do the math, it adds up. But what could actually be more of value to you right now is making a full price offer on the home and requesting a concession of 2% to be applied to your cash to close when you get to the closing table. Because typically, if you're paying cash to close, it's going to be about 2 to 3% of the loan value. And if we can get concessions for 2 to 3% of the loan value, what does that mean? That's where we're in the scenario where we have zero down payment. We're working with a killer lender who's waiving our fees, and now we're getting concessions to close that cover all of our cash to close. And we might actually be getting a few $100s back when we sit down to close on the home. Is everybody tracking? Give me some thumbs up in the chat if you're like, woo, woo, I didn't know about that, and now I'm excited to hear that. If you already knew about this, you can give me a heart in the chat just to let me know you are in alignment with what we're talking about. Awesome. Thumbs and hearts, thumbs and hearts. This is good. Awesome. All right. Good to see you guys are tracking. So in the seller's market, how do we get concessions in a seller's market, which we saw this big time in like 2022, 2023. This is where there are multiple offers on the home and you're competing against other people. This is where you're seeing houses that sell for over asking price. And this works in really resilient markets and really strong markets. Like Jacksonville, Florida is a really good market where I wouldn't be afraid to do something like this. But it's where you offer the amount of money you would like applied to your closing costs on top of the purchase price. So if you say you're listed at $345 and I need about $5,000 to close, I'm going to offer you $350 and ask for $5,000 towards closing costs. And that's how you get your concessions and your credits toward that. So a great realtor, a military MLS realtor, is going to help you decide which strategy is right for you to get you the most at the table and to help you get into the home the easiest. If the seller agrees to any of these terms, just as a reiteration, it could mean that not only do you have a $0 down payment, but you also have a $0 cash to close. And in many cases, which I see often in the Pensacola area, our buyers are walking away with a little bit of cash in pocket that's actually paid back out to them. Ashley, can you talk to us a little bit from your perspective what concessions look like on the lender side?
Yes. So the concessions are costs that the seller agrees to pay that are typically the buyer costs. So this can include things like the funding fee, prepaids, escrows, and any other closing costs on the loan. Concessions can also be used to pay towards debt. So this is something we see if a real estate agent is great at negotiating, he or she happens to get extra money in concessions, those can be used to pay off any kind of debt. It can arrange for a credit card to be paid off or a car loan. They can also be paid down. It doesn't have to be completely paid in full.
I'm so glad that we're talking about this because a lot of people don't know how much leverage buying a home can actually give you. Okay, so once you make the offer and it's accepted, what actually happens next, Ashley?
The realtor and the lender start working together to get your loan closed. The buyer is going to put earnest money to the title company. That is usually about 1% of the purchase price of the home. It gives the buyer a legal stake in the property. The seller can no longer sell the house to anyone else once the earnest money is paid. And again, that gives you the legal claim to that property.
Okay, so the earnest money, is it like a down payment? Like what happens to that money?
It is not the same thing as a down payment. This is a question we get asked often. It's a good faith deposit that can be applied towards the down payment or the overall closing cost on the loan. If you're getting a large seller concession, you can actually get that money back.
Okay, so the money can come back. So once we're under contract and we have the earnest money paid, we're waiting to close, what's the number one thing that a buyer needs to remember during this process?
They need to be careful about incurring any more debt. This is something clients get excited about new homes. They want to go buy a new car, new furniture, but it can really blow up the whole mortgage process. If something pops up and you need to spend extra money or you need to finance something, I see this when people are coming from overseas, especially, they need a new car whenever they get back to the States. Make sure that you talk to your loan officer about it first to make sure that you can handle, or your DTI can handle that new payment. This is also the time in the process where you're going to be signing your initial loan disclosures. These are initial disclosures. They're typically on the higher end of estimates. So don't freak out whenever you see the numbers up front. Have the conversation with your loan officer, question what is actually going to be on the final, what's not. In our world, we have to make sure that we disclose everything correctly for the just in case situations. Yeah. So they are going to change. Also, in the beginning, we're using estimate numbers whenever you go to closing. I don't know what insurance company you're going to have yet. At that point in time, I haven't been able to get title fees back yet. So I don't know what the exact numbers are going to be, but we're usually pretty close. But oftentimes it's on the higher side.
Okay.
I personally rather it be higher up front and lower whenever I go to closing.
Okay. So just to recap everything we just learned, we learned about concessions. We learned that concessions can even include the seller of the property providing a credit that will pay off debt for you, a credit card debt, a car loan debt, or just make a payment on those things for you, which can make closing easier. We also learned that once you are under contract, you should not be acquiring any more debt, like a credit card payment or a car payment. No more debt until you close on the property. And let's see, we also learned that initial closing disclosures from your lender will be very high. Katie, if you will put the strategy call in the chat, I'm going to remind everybody that if you want to have a one-on-one with me and Ashley from Trident, we are giving away Stanley tumblers to everyone who comes to a strategy call and works on a game plan with our team. Inspections and appraisals. After you go under contract on the property and you're working towards closing, there is also something that's happening in congruence to that. So at the same time, the inspections and appraisals are happening. The VA loan requires that homes have to meet a certain VA standard that other loan types do not require. So that includes pest, WDO, rotting wood and termites is basically what we're talking about there. If you are on private septic and water at that property, those things have to be inspected as well. There's also the VA loan appraisal, which is actually time sensitive. And if the VA appraiser disagrees with the value of the home, you're in a situation where a reconsideration of value or tidewater has to occur. And the buyers, the seller, the lender, and the VA appraiser must all work together to come to a solution. Ashley, can you talk with us about things that come up during this process of inspections and appraisals?
Yes. So a little clarification on the VA appraiser. They are looking at other homes and getting the value for the property. They do have the guidelines, which are called MPRs. Those are minimum property standards that they have to go by, like you mentioned. They look for things that could be hazardous to live in, like termites. Steps without handrails is one that we see often. So if a house has 3 or more steps leading up to it, it has to have a handrail on it. Chipped paint on older homes. They want to make sure there's no lead poisoning. Open electrical wires and different things like that. Having said that, they are not a home inspector. You still want to get actual inspections done by the professionals. And again, like you said earlier, Trident, over 80% of our business is VA. We know what to look for. We can advise on possible issues before the appraisal process is completed. Oftentimes we talk to the real estate agent about the home, look at pictures, go over what we think needs to be fixed before the appraiser even goes out there. I feel like VA loans are easier and overall better than conventional loans, and not every lender can say that.
Yeah, I would agree. A lot of lenders are afraid of VA loans. But I'm going to tell you, this sounds like a lot of hoops to jump through, but in reality, it is 100% there to protect you. Some homes are even advertised as, "We will not accept a VA offer." That is not discrimination against veterans. And I think a lot of people can have that misconception that that's what's happening. No, what they're saying is the VA won't finance your purchase of this home because we have wood rot. You know, there's something here going on that we are not comfortable walking into a VA inspection with. So just be aware that these are hoops, but they're there to take care of you. But the complicated process is exactly why it is incredibly important to work. Number one, my recommendation, with a small lender who specializes in VA loans like Trident. Like I said, I did this with a big bank with the word Navy in their brand name, and they forgot to order my VA appraisal. And so I was literally homeless for 14 days in between houses. And it was just, I had no backup plan, no contingency plan, because we were set to move into that house. So it's just very important to know that your realtor has you back. In that circumstance, my realtor did not have my back. They didn't know the VA loan process. They didn't know to double check with the lender to make sure that it had been ordered. And my lender had forgotten and dropped the ball. So, wow, that was a really rude awakening for me. Inspections and appraisals are also your last shot to really know and decide if the home is right for you. So as a buyer, you've got this like beautiful 10 to 15 day period where you can pop the hood of that home, so to speak, get in there, dig around, and know if it's right for you or not. And so you want a really trusted realtor who's going to hook you up with the best inspector in the area and who can be your eyes on the ground if you're not there. Someone you can trust to go in and say, "Listen, I know that you love this place, but I just found mold in one of the bedrooms, and that's the bedroom that you had decided you wanted to be the nursery, and maybe you need to rethink this purchase." Okay? That's your only opportunity to say, "I've got to step back and find another property because I'm not confident on this one." The inspection period is the period where you have the right to claim your earnest money deposit back if you change your mind. So let's keep going. Ashley, I have another question for you. While the inspections and the appraisers are working on the realtor side of the house, what's actually happening at the lender?
Yeah, great question. So your loan officer and team is going to work with you and the investor's underwriter to see what's needed for the loan transaction. The underwriter reviews your initial disclosures, your income, assets, and if they have any additional questions on your file, they come back with what we call conditions. Expected conditions are clear title work, an acceptable appraisal, a clear WDO, proof of cash to close, We've got to see the earnest money actually clearing your account. Those are all very, very normal things that we expect whenever we do the initial submission. Also, where we talk about things like funding fee exemptions, you may have getting taxes waived due to having VA disability ratings, different things like that. All of that is discussed now. The conditions have to be cleared in order to obtain your clear to close. This process can take about 30 days on average with Trident. Your clear to close may not happen until a day or so before closing. I get it. It is a very, very stressful time for everybody. It is normal. We are here working to help you get to the closing table on time, I promise. So I know it's stressful, but just try to take a breath. We are working on that clear to close.
Thank you. And they're actually really fast. I will say Trident, we're working with a military MLS member right now who did a pre-qual with Trident. Then when they were ready to do home shopping, they did their pre-approval with Trident. And I think you guys have them clear to close in 3 weeks. So, because they are clear to close now and that's a week ahead of schedule. So Trident's pretty quick. I'm impressed by how quickly a small business can move. Closing is where all the final legal documents are signed and the house passes from the seller to the buyer. And the seller and the buyer balance accounts. So the title company, the real estate agents, the lenders, they also get paid their service fees. The buyer will be required to front 1 year of insurance and tax payments and any service fees owed to fund the escrow account, which is where it can be very beneficial to have had those concessions negotiated way back in step 3. Because if you don't have those, you do have to bring that cash to the table. If anyone has questions about what the cost of and let's just hash into it, insurance. What is a typical home insurance policy? That's going to be around $1,500, anywhere from $800 to $1,500 for the year. They want you to bring that so you pay for a year in advance at closing. Tax payments. That could be your property taxes for the next year, which could be high or low, depending on if you're homesteading the property, if you have VA disability, etc. And then service fees were if you have money to pay to title for their services for closing. So like I said, all of that can accumulate to be around 3% of your total home purchase price value. So when we are asking for those concessions, these are the things that we have in mind that we're wanting that concession money to pay off. So the lender will then, the buyer's lender, so that would, in this circumstance and example, would be Trident. Trident would then fund the loan for the buyer to take control of the property and pay off the seller. An average home closing cost on the lender side is going to be around $1,300 to $1,800 for a mortgage loan origination fee or an underwriting fee, and then about another $700 for an appraisal. And Trident is agreeing to waive that. So again, that's another $2,000 that you can take off of your closing cost balancing activity. Let's see here. The last thing that I want you to take away is these are the numbers when we are starting the home search process and we're selecting the team that's going to represent you in your corner, and you're talking to your realtor about what kind of offer you want to make on the house that you find. These are the numbers that we're trying to get balanced as close to zero as possible. Okay, does that make sense? Everybody tracking? All right, so let me pass it over to Ashley because she's going to give us a few more nuances about closing that you need to know.
Yep. So 3 or more days before closing, you're going to receive your initial closing disclosure. Sorry. By this time, or by law, this has to be signed 3 days before closing. Mm-hmm. So it has to be signed 3 days before closing. If not, you will not close on time. It gives you updating closing figures, but it still might not be 100% correct. So depending on what's going on in the background, you have to sign the initial disclosure. It says you've received it, you're aware, you're tracking for closing. At this point in time, you can also contact the title company and get their wiring instructions. If you do have to bring any money to closing, then you can go ahead and start prepping your money to be sent with the wire. I want to mention that you can close anywhere with a mobile notary or get a specific power of attorney so that someone can sign on your behalf. If you do have a power of attorney and you are the active duty member, there has to be an alive and well statement done on the day of closing. That's important to kind of have in the back of your head, because they either have to write a statement, or if they are truly off in like a war zone situation or something, it has to be from someone that is above them. So a commanding officer, something like that, has to say, yes, this active duty member is alive and well. If you have paid any of those inspections, whether it be appraisal, WDO, well inspection, all of those things, if you have put those on a debit card, not a credit card, but a debit card, you can possibly be reimbursed from it. I cannot speak. I'm sorry. You can possibly be reimbursed for those at closing if you have seller concessions or different things like that. So just because you had to pay them up front, don't necessarily think that money is always gone forever. Or if you do have a required down payment, that can also go towards that down payment number. At closing, like you mentioned a minute ago, you're also starting your escrow account. So that's kind of a big chunk of money that's usually required for closing.
Thank you. My big takeaway from that is you can close from anywhere. So drop close from anywhere in the chat if you're tracking that. That means if you're PCSing to San Diego and you live in Virginia, if we matched you with a military MLS realtor who was your eyes on the ground and you felt comfortable about the property you were buying from there, you can do a mail away closing from Virginia. You never have to go. You can purchase the property sight unseen with the help of your military MLS team. And for example, we recently closed a military member, dual military couple, military MLS members, dual military. One was stationed in Japan and one was deployed. And we were able to deployed to the Med. So we were able to pull off a military MLS closing on time with those two people located on opposite sides of the world. So, Joanna, we PCS in January. Is it too early to do a strategy call? No, I think now is the perfect time for you to start your strategy call. You can go ahead and get booked and Katie will help you get that. Escrow is a bank account that is managed by your lender, and it holds 12 months of your property taxes and insurance in it. So you must always stay 12 steps ahead. Sorry, 12 payments ahead. Ashley, you're looking at me like I'm wonky. I am wonky. It's been a long class.
That's okay.
You must always stay 12 months ahead in your escrow account, and it gets balanced every year. And a really great realtor will stay on your butt and remind you that after you close, you better file homestead exemption on your property so that your property tax payments the following year are as low as they can be, because year one is always the cheapest. Year one is always the cheapest. And Cassie's saying, don't forget to follow our Facebook page and our Facebook group, and she's putting that in the chat. If you want to stay closer to the action and closer to this information, we invite you to do that. All right, so I do want to give you this warning, especially since we've had all of this really wild, wacky weather in the United States over the past 3 years. Insurance companies have been hiking home insurance rates. And this did personally happen to me, and I've seen several other people who it has actually happened to. They hike your rate at renewal, and they are not required to notify you. The only person they are required to notify is the bank where the escrow account is held, okay? So basically what happened to me is at escrow balancing last year, my insurance went from, I live close to the water, so it's naturally a little bit more expensive, went from like $3,000 a year to $12,000 a year. And my escrow account was out of balance, and it showed that I owed a significant amount of money, over 10 grand to escrow. Kelly says that happened to her too. I've seen this happening to everybody all over the country. Essentially what I found out is they did their due diligence and they notified the bank. Well, it's not the bank's responsibility to tell me. So there's this really gray loophole where I was left out and just expected to pay that. If that happens to you, please know you are free to shop for other insurance policies. All I did was pick up the phone, call my insurance agent, and tell her to find me a cheaper policy. She found one that was cheaper than my original policy. We canceled my old policy, turned on the new policy, informed the bank. The whole process took about 45 days to rebalance escrow but once my escrow was rebalanced, I was all good. Okay. If that happens to you, feel free to reach out to your military MLS concierge. We can give you guidance on next steps. Just take a deep breath and know that that's just one of the responsibilities of homeownership, is understanding that you got to keep an eye on your escrow account every year and make sure that it's balanced and nobody's charging you rate increases. All right, so now we're on to step 7, which is the URL. We're ready to talk about how to save money and actually come out more in the green in the future. So every single week, Cassie and I write the Military MLS newsletter, and we email it to you. And in the newsletter, we are sending all of our Military MLS members updated market trends for military families. We talk about things that are happening in the military space that could impact you, like PCS law changes, real estate markets that are popping off, all of the good juice. But the biggest thing that I think is of value in that newsletter is we give you the interest rate update of the week. Interest rates are changing on a day-to-day basis. And then Cassie and I notify you every week, like the thermometer. Are we up? Are we down? Are we up? Are we down? This is my biggest takeaway for why you should be watching this, because not only are we giving you the interest rates for VA loans, we're giving you Trident's interest rates. And like I said, they have the lowest. So if you look at your interest rate on your home or your property, and even if you're closing in the next 6 months, whatever you close on, let's say you're at 6%, and in 6 months it drops down to 5%, and 6 months from there it's like back at 4.5, honey, you need to URL. You need to URL and save money. When it is dropping is your opportunity to get a lower home payment. So Ashley, tell everybody here in a nutshell, what is an URL?
An URL stands for an interest rate reduction refinance loan. It is a quick way to refinance out of your higher rate into a low one. They call it a streamlined process. So there's no income, there's no assets. You don't actually have to show that you're working anywhere. It is a very quick process. We can actually do it on a soft credit pool now as well. It doesn't even have to have a hard credit pool. You can do this 210 days from your first payment date. Mm-hmm. Your interest rate has to reduce by at least 0.5%. Mm-hmm. And you had to have made 6 payments. So this usually equates to about 8 months. Depending on which state you're in and what your closing costs are, that we can sometimes do this with no out-of-pocket costs. I say sometimes because some states are much more expensive than others. Unfortunately, Florida is one that has a lot of transfer taxes. So it might be that the 0.5% rate drop doesn't quite cover all of the costs on the loan. When Trident tries to do an URL, we try to pay all of the actual costs so that you are only bringing to closing your prepaid interest and your new escrow account. So it's a very easy decision to make because you're just getting a better rate. Your payment's going down. Absolutely. And you're not really paying anything to do it.
Absolutely. There's no smoke and there's no mirrors with Trident. They're not here to pull the wool over your eyes and pretend to be military connected. And pretend that they're the best option for you, even if they're not. This is just a veteran-owned company who's going to give you the best rates, who's going to URL you at the lowest cost, if not for free. I think the big important thing to take away here is you can only URL an existing VA loan. Right. You can't URL if you have a conventional loan and you're trying to URL it into a VA. It doesn't work that way. You would have to do a new VA loan. But with that, I am ready to start open Q&A. We've been collecting all of the questions since we started. David's always like quick on the gas pedal. He's our favorite student. He's in everything. We're going to give you priority if you do what David's doing. Otherwise, we're just going to work through the chat chronologically here and start getting some questions asked. Nice to see you again, Diana. Thank you for coming. Go enjoy your kids. David, what's your question?
Sure. Question on the IRRL. It's not automatic, right? So say my lender is Suncoast Credit Union here in Florida, right? I can do, if I want to do an IRL, they might not offer it. Do I have to shop for a loan person that offers it, or is it automatic? How's that?
It is not automatic. You would have to find someone to do it. I would say for the most part, if someone offers a VA loan, they should offer an URL. I would be surprised if they didn't.
Florida's wacky, so you know.
True.
And you can URL from one bank to another. Is that right?
That's correct.
Right.
So if you're with Suncoast, but let's say their Earl rate is 6% and Trident's offering 5.75, you could
It
Earl
wouldn't be
to
enough.
the.
You have to go down to 5.5. Well, depending on what you were. If you were at 6, you have to go
Well,
down.
Yeah.
8.
At 8?
I'm just kidding. No, I'm at 2.
Yeah. Oh,
So-
yeah, you're good.
Yeah. Okay. Well, that
All right.
that solves that. So you can do now that. So can you also do points or cash out or any of those things during an IRL?
You can pay discount points if you want, depending on the market. In
Mhm.
today's market, I would not pay discount points
Mm-mm.
just because the market's supposed to be going down. If you pay discount points and you refinance later, you basically lost that money. It's just not worth it. Cashing out, you cannot cash out on an Earl. The most you can get out is $500. And in the state of Texas, you can get out 0.
Oh, thank you. That's really helpful.
Mhm.
That would, because you didn't know if you could, if you have the closing costs, if you could cash out some for the closing costs. So
You can roll them into the loan amount. You just can't get cash back.
okay, all right, thank you.
Thank you. All right. So let's start. We've got Nikki's question. Nikki Bratton wants to know, do you recommend putting down a down payment to remove the funding fee?
So it does not remove the funding fee completely. Is that what you mean, or just the reduced funding fee?
That's all I have as far as the question goes. Let's see if do you recommend putting a down payment to remove the funding fee?
So to reduce the funding fee, if you have used your VA loan in the past, the second time you use it, you do have a higher funding fee of 3.3%. If you do have the cash, I would go ahead and put the money down to reduce the funding fee. If you put 5% down, then it drops it to 1.5%. If you put 10 or more % down, it drops it to 1.25%.
And so that the funding fee is typically financed into the total value of the loan. You don't really notice paying it over the amount of time over 30 years because it is just a few $1,000s. It doesn't exceed too much. But yes, Nikki, if you do bring a down payment, it will lower your funding fee for sure, but it's not required. Jumi, I've seen some realtors say that if we talk to them, they can possibly cover the closing costs, meaning we wouldn't even pay anything, but only if they are willing to do it. Jumi, I would be curious to know if they are kind of saying, maybe if you use them as a lender, or potentially they're talking about the strategies that they're willing to use to negotiate your offer. So I'm not sure, Jumi, and I don't know exactly what your question is. But what I can tell you, I can't speak about them, but what I can say is if you work with a military MLS realtor, we will match you with a military connected realtor who has your best interest at heart. And we'll be sure to introduce you at least to Trident Home Loans, who I do know has the lowest interest rates and is already waiving closing costs. And you can shop them. You can compare them to anyone you like. And I challenge you to. Honestly, I think everybody should shop a couple of lenders and know what it's like to get a full service offer, like what they're offering versus what's, standard out there on the market.
Yeah. Can I mention something on that too?
Go ahead.
If you have a loan estimate from another investor and you just want a second look, send it over to us. If it's a great deal, we will tell you it's a great deal. I have no problem doing that whatsoever. If they are charging hidden fees on there, we can help you point those out. So I always suggest everybody to get a second look somewhere else, get another rate quote somewhere else. Somebody else might actually do better than us. It doesn't happen often. Occasionally it does. Sometimes they service the loan and they're looking out long haul. So always shop around.
Awesome. Thank you. I think also Abernathy is asking, how does the disability rating affect the funding fee on a second VA loan?
So if your disability rating is 10% or more, you are VA exempt. It doesn't matter when you're using it, you are VA exempt. So you do not pay that funding fee at all.
Okay. And they may have paid it on the first because you may not have had the disability rating, Abernathy, on the first VA loan. I do know that you cannot get the funding fee back if you receive your disability rating later and you've already paid the funding fee, unfortunately, you cannot get it back. So hopefully that's helpful context for you. Hi, Liga. It is good to see you. Liga is asking, would the fees that Trident is offering to waive also be waived for a refinance?
Yeah.
Yes. Awesome. Liga, I know you and I had a call recently, so if you want to get connected to Trident, let me know. In asks, what is the Trident's minimum credit score and what states do they lend in? So we'll start with, what states do you not lend in?
Yeah, that's an easier list. So we do not lend in New York, Nevada, or Hawaii.
Okay.
Other than that, we lend everywhere, including Washington, D.C. I personally am licensed in 13 states. Marty is licensed in all of them. And then we have other LO team members that you guys may be connected with that are licensed in different states as well. And we're pairing you based on where people are licensed.
Awesome. Thank you so much. And then what is the minimum credit score was the other half of that question.
The credit score is tricky to say a minimum across the board. So technically our minimum is 500 for a VA loan, 580 or actually it's 550 for FHA and 620 for conventional. Just because you have a 550 credit score or a 500 credit score doesn't necessarily mean you'll qualify. There's more that goes into that qualification. So definitely if you're there, you can always give us a call. We can help you rebuild your credit, see what you need to do, those types of things. But it's 500 is technically the lowest.
And if you have a low credit score, don't be afraid to reach out and have a strategy call, because we have partners who can help you repair credit. And sometimes that can happen in as little as 90 days, which is just, 1 quarter. All right. Erica wants to know about VA entitlement. We bought a home where we are currently, and we do want to retire, but the military is going to give us orders soon. We will be looking at buying a house at the new location while keeping our current one. So I don't see a question here, but she says it's about VA entitlement. So we can just kind of nutshell, snapshot how that works. Erica, Ashley, do you want to speak about how entitlement works to allow you to purchase in multiple locations?
Yep. So you have a certain number of entitlement. It's based off of 25% of what the max loan limit is in that county's area. It can be very confusing. I think I saw in the chat that somebody says they have a formula that they have. The VA has one on their website as well that you can type in numbers. I think the VA's website is a little bit confusing to use. If you do a strategy call, reach out to us. We can tell you how much you qualify for as far as your entitlement goes. You can also call the VA directly and they'll walk you through your entitlement.
Awesome. Thank you. Wayne says, scheduled a call about buying in Alaska. Talk to you soon. Excited to have a call with you soon, Wayne, and excited to ship you a Stanley tumbler, maybe all the way to Alaska. So we'll see. Looking forward to talking with you. Okay, next question is from Elizabeth. Erica, if that did not answer your question, hit me up in the chat again. I just want to make sure we full circle covered that. I also have a VA loan bootcamp class. Also, just coming to a strategy call. We can talk to you one-on-one about how that works. Elizabeth, the lender has people who speak Spanish. Sí.
We do.
Absolutely. We had a lot of people leading up to this class wanting to speak with a lender who is competent in Espanol. And the answer is yes. I think any language that you need proficiency in, we can help you support, not just Spanish. So you guys just let us know what you're more comfortable speaking in, okay? And hopefully we can take care of that pretty quick. Are there any issues if you get pre-approved with your lender but are unable to find the right home within 90 days? And this question is from JR. This is a good question. I haven't had this one yet in any of my classes, so this is a good one.
There's no issues. Your credit report, whenever we pull a hard credit report, is good for 120 days. So really we say 90 because that gives you time to shop and then 30 days to close on the deal. So worst case scenario, if you end up finding something after that time period, then we just have to repull credit, get updated documents like LESs, things like that. But you're not hard coded into anything. It doesn't hurt anything. It's all on your timeline.
Awesome. Thank you. All right, Angelina, does one always lose the earnest money if one backs out of a deal, say because of an inspection report?
Do you want to answer this one or do you want me to?
Yeah, I'll take it. No, you don't lose your earnest money. Not always. So typically when you go under contract on a home, and contracts vary from state to state. That's why you can't have a realtor in Florida help you buy a house in Washington, because real estate law and contracts are different in every state. And that's also why we've taken the time to build a really robust network of military connected realtors at the Military MLS. But your realtor should keep you very educated on what exactly your contract means. So the realtor should sit down with you and say, we are putting you under contract. This is the style of contract that we're writing. It could be an as-is contract. It could be a standard contract that's not as is, but it will have your exit terms. And those exit terms will be around inspection. So it definitely depends on what contract your realtor wrote the offer on. And so if it's important to you to be able to walk away during inspections, if you are not happy with the home, make sure that you tell your realtor that up front so they know what offer to write for the property. Caveat, let's throw a wrench in it to make it like super interesting. Some homes and sellers will tell you how they want the offer written, and they won't accept an offer written any other way. So for example, the as-is contract in Florida is the contract that allows you to terminate based on anything you find during inspections. But the residential for sale contract is the contract that says even if you find something you don't like in inspections, you still have to stay and see it through. And if you want to leave, then the seller has to mutually agree to let you leave the contract.
So on every VA loan, there is a VA addendum signed where it talks about value. So if the value to the property doesn't come in at your purchase price, you do have the option to walk away and get your money back.
And get your earnest money back. And that has to do with the appraisal, right?
Right.
So if the VA appraiser says that the value does not match, you can leave. You can choose to stay and figure it out, work through the solution, but you can also choose to leave. So the answer to your question, albeit a very lengthy one and complicated one, Angelina, no, you do not always lose your EMD deposit. Diana asks, can the rate of an already owned VA loan change?
Only if you closed with an ARM originally. If you closed a fixed rate loan, your rate will not automatically change. You either have to do an IRL to reduce it, or that's pretty much it. It doesn't raise. If you close with an ARM is locked for a certain amount of time. And then after that, it is an adjustable rate. So it can change after that fixed period is finished.
Thank you. Robert asks, do inspections also include land and soil assessment if you request it? So Robert, the buyer is typically responsible for paying for inspections on a property because it's effectively you doing your due diligence to ensure that this is the property that you want to buy. And if you want a land and soil inspector, tell your realtor that you want a land and soil inspector, and they will help you locate one, hire one, and get the inspection sent out. But yes, pretty much anything that you find during the inspection period, if you don't find it to your satisfaction, you can request a credit or you can ask your realtor to help you leave the contract. David, when you do we already answered that one. David, Deborah, is it recommended for first-time homebuyers to purchase a new build? This is an interesting question. Ashley, do you want to start with this one?
I think it depends on what you want. Oftentimes, new builds come with a builder warranty, which is beneficial. You can also get a home warranty on a house that's been there. Sometimes new builds offer, if they go with their preferred lender, they give you additional benefits. They have lower EMD money sometimes. It just really depends on what you're looking for. Homeowners insurance is cheaper. It's really up to you.
Awesome. Thank you. Erica would like, and I think that's the right answer, Deborah. I have bought several new builds and I've also bought one older home. Personally, for me, it's always going to be a new build if it's available. But I have several military MLS members that just love the character and charm of the older homes. And for them, they could never enjoy it. I showed one a few weeks ago and we walked in and she was just like, it's too pretty. This is not what I want. I want more character. So it's about what you want, Deborah, and what's best for you. And your realtor can help you understand that. Erica, what is the current IRL rate? Ashley, do you have rates to share with us today? It's such a good question.
That is a great question. No, I don't. I was not prepared for that. I was out yesterday and I checked the bond this morning and I didn't actually pull rates. We are sending out EARLs. So the way that we've been doing it recently is if you are at 6.25 or above that, we've been getting ready. So basically everything is pointing towards rates dropping in September. We are going ahead and registering EARLs, but not locking them. So then the date that they're where they need to be pricing wise, we can go ahead and lock it and close the loan. So we have people in our pipeline right now with interest rates from 5.75 all the way up to 6.5 that are kind of waiting to see what happens in September.
Awesome. Thank you so much. And also your rate is going to depend on your income and your debt to income ratio and your credit score. So, let me add here that if you think that you need an EARL or you're getting ready for that, just go ahead and get on our EARL list, Erica. Basically, you could just email Cassie or email me and say, I want to get on the EARL list, or you could set up a strategy call and we could have a conversation about what that looks like. Is there a VA loan limit? Asked by Katie.
There is no technical loan limit amount. Different investors will lend upon different amounts. We recently closed one that was 3.5 million, and I think we've had ones in our pipeline up to 5 million before. And if you've never used your VA loan, or if you don't have any entitlement charged, you can get a $3, $4, $5 million loan as long as you qualify for it with no money down.
So I hope that answers your question, Katie. Are you going to buy a multi-million-dollar home? Just kidding. Kesia, what is the difference in using a VA loan benefit as an active duty member versus using it as a veteran or a retiree? And essentially what I was pointing at earlier is what income qualifies you. And if you're active duty and you are greater than 12 months away from your termination of service date, your active duty income can qualify you for the loan. But if you are 12 months or less from your termination of service date, you do not have active duty income as a qualifying marker for your loan. So that can significantly impact what you are allowed to lend or not. In which case, your saving grace there is if you have an offer letter from a civilian company that states how much you will be earning at their company once you terminate from the service, then you can use that to qualify for the loan. Ashley, do you have anything to add?
Yeah, mostly your start date needs to be within 60 days of your closing for the offer letter, and it can't have any contingencies on it. So if there's a contingency for a drug test, or if you have to take a certain course before you can start, those have to be cleared in order to use that job offer letter.
Truth. And if any of you are within 12 months of leaving the service, let's see, Christina said, would it be offer letter for employment plus VA disability rating?
If you have your disability rating already, yes, we can use that income.
Yes, you can use the disability income. We can help you. So if this is you and you're in this boat, hop on a strategy call. We'll chat with you about what to do next. But yeah, if you think that your service date is coming up soon, like I think that it is possible, it is remotely possible we might be out of the service in about 36 months. So that means I have that amount of time to purchase as many homes as I can on the VA loan with my husband's active duty income as kind of that common qualifying marker. Because once you leave, it is kind of hard to get, it can take you a year or more to get resituated with driving income coming in to help you purchase. Christina says, you mentioned there's a change in using the VA home loan at the 12-month prior to retirement point. Can you expand on that? Okay, I think I answered that. Christina, if you have more questions on that, let me know. Kendra, how immediately after closing does Trident sell off our loans? And if and when do you sell our loans? Do you continue any servicing relationship, or do we have to deal with a new lien holder?
That is a great question.
Yeah, I like that one.
So part of the reason that we can offer the lower rates is because we do sell off the loans. We are not big enough to actually hold them and handle them or service them. We are technically a broker in the broker space. We are a lender in that we fund using our own money. But then within a week after closing, we sell to the investor that underwrote the file. So within a week, we sell it to who underwrote the file. And then after that, they may keep it. They may change servicing. I do have a couple of investors that do keep all of their servicing. So if that's something that's important to you, let us know up front so that we make sure to pair you with that investor so that they can keep it in-house. We do have relationships, and if people have problems with servicing after the fact, then always come back to us, let us know, and we can contact the higher ups at that company and let them know what's going on.
And also you service the Earls.
We do not service at all. So you will never make a payment to us.
No, you do. You help them Earl after.
We can help you refinance, yes. So basically, we keep a list of every loan that we close. And whenever you're getting close to the refinance point, we reach out and say, hey, guys, this is what's going on. If you're interested, let us know.
Thank you. Does Trident only do VA loans? I know we've talked a lot about the VA loan today, but I think number one, that's because Marty's a veteran and the other co-owner, Tim, of the company is as well, right?
It is. They are. And it's just overall, in general, if you qualify for a VA loan, it is your best loan to get. Mm-hmm. So we do everything. I have VA, conventional, FHA, USDA. We actually do rehab loans, both FHA, VA, and conventional rehabs. We do DSCR loans, investment properties, pretty much anything under the sun. We do jumbo, condos, anything you can come to us for.
Thank you. All right. So, and I do want to say for everybody here, because I know this is like home buying 101 and a refresher for those of you who aren't buying all the time. And we've talked about how you can wash, rinse, repeat the VA loan, but there is a certain point where the VA loan may not make as much sense as a different loan type for you. So if you've stacked 5 or more properties on the VA loan, at a certain point, it's more expensive to do a VA loan than it is to do a different loan type. I can't say exactly what the other loan type would be because it's based on your personal circumstances, your personal income, what you qualify for. So it's important to know that, to understand that at a certain point, you do have other loan types at your disposal. But yes, VA loan is typically the best place to start. All right. So my next question is from Sabine, and we don't have very many questions left. I've got about 3 more to get through before we end our Q&A. So I just want to remind everyone, if you have questions, to put them in the chat and we'll make sure that we get them covered. And if you want to meet one-on-one with me and Ashley, and let's talk about your upcoming opportunities, build your strategy plan, and also know kind of what you might qualify for, book your strategy call. Everybody here today is getting a $5 Starbucks gift card, which will be mailed to you. We're going to do the coffee forms soon. And then everyone who does come to a strategy call and gets your personal plan built does get our tumblers. So last call for questions. Sabine wants to know, can the VA loan help buyers with HOA? That's an interesting question.
It is. I don't know how to answer it.
So I think it's important to know that when you're home shopping, you have the discretion of choosing a home that is in an HOA neighborhood or not. And I know that HOA fees can be as little as $100 a year, or in other communities, you could be paying what's called like a community development fee, which is kind of like HOA on steroids. And those can be like $5,000 a year. Mm-hmm. So you have the discretion to tell your realtor that you do or do not want an HOA neighborhood. So, and I think it's also important to have that conversation with your realtor, because some people may think that your fees are super high, but I'm happy to pay $100 a year, $300 a year to live in a neighborhood that requires everybody to keep their grass cut and trash off the sidewalks. Like, that doesn't bother me. But, when we get into the thousands of dollars, that's where my threshold is kind of like, nope, not going that high. So communicate with your realtor to make sure you land in a property that you can afford. The VA loan is not going to give you any money to pay your HOA. That's going to be something that you have to pay out of pocket. Mandy wants to know, can Trident match or beat a builder's preferred lending offer? And I think what I would like to share on this is a lot of the builders are so anxious to sell their new home inventory because, like, think about it. Their motivation is, as soon as I can close out this neighborhood, I'm going to build this neighborhood. And I've got to close this many properties before I can get out and go build another one. So a lot of those builders will actually use your lender that you pick and give you the same rate. And they do some wheeling and dealing behind the table to get you to closing at the same rate. But Ashley, you can speak to this too.
I think it depends on what the builder is offering. I've seen them have higher interest rates than us, and then they offer like $10,000 towards your closing cost or something. Whereas whenever you come with us, we could do maybe a lower rate and still offer the 10,000, or it's just in general a lower rate. If they are doing like the buy downs, which some of our builders here in Pensacola are, where they're offering a 4.99 for the life of the loan, we are not going to be able to beat that. I can go ahead and say that up front. They bought a huge bulk of money at one time, and in some cases, they're paying $30,000 to $40,000 per house to have that interest rate. So I would suggest see what the builder's offering and see if it is something that we can do or not, or if they're offering a truly good deal, or again, if there's hidden fees there.
I think that that's helpful information. I know that I was working with a military MLS member locally and a local builder who the realtor of that building community flat out said to me, Kimber, we will buy down their rate with any lender to match what our lender is providing, any lender they want to choose. So I think that that's helpful information to know. It's just helpful in general to know that you have options, and nothing is ever as black and white as it seems.
Mm-hmm.
All right. Kelly asks, does Trident Home Loans have recommendations for VA builders that they are in partnership with for the Pensacola area?
Yes, just let us know. It depends on what you're looking for in the house, ultimately.
That's really helpful. Thank you, Kelly. Kelly, I am locally in Pensacola. If you are working on building in Pensacola, I may have some options for you too. And then David is our last question of the day, I believe. David says, if the VA shows, so we kicked off with David and then we're wrapping up with David. So if the VA shows based on the county you are in that the max entitlement is $200,000, which equates to about an $800,000 loan, can you get more than that amount in the same county?
You can.
How can you without paying the difference? So like you were saying, you closed on a $3 million. How is that possible that you're not paying the difference between what the VA's max backing is?
So that changed a couple of years ago. It used to be if you went over the county limit, you had to put 25% of the difference down. They actually did away with that. So they're now saying that they'll guarantee up to that 25%, and then they're still considering that the 25% guarantee. So whenever you go above that county limit, you're basically using all of your entitlement, but they still do it where you can go over it. You don't have to do anything else. You're just using all of it. If you do purchase in a high county limit and you use a higher amount of entitlement, and then let's say you PCS, you move whatever, you go to somewhere that has a lower county limit, then you may not be able to purchase again without having to put money down, depending on how much entitlement's used. But you can go from a low county limit like the 806,500 and go to San Diego, where their county limit might be like 980,000, so they have a higher limit, and purchase there and still buy again with no down payment.
So if you buy, say I'm staying in my same area and I use up $198,000 worth of backing, so multiply that by 4, and then I only got this much. You're saying I could get another loan for higher, and even though I only have entitlement for only the 2,000?
So that's where you're going to have the down payment. So you would look at the calculator and see what the difference is, and it's going to have a required down payment that you have to meet. This is where Kimber was saying at a certain point in time, it may be better to take a different loan product. So depending on how much your required down payment would be, I would look at it and be like, okay, this is going to be your better option long-term.
So it's only on the first loan that you can max out. That's what you just said,
without putting any money down. Yeah.
Okay.
Theoretically, if your other properties that you owned were not on the VA loan any longer and you had your entitlement restored and you were kind of starting over, could you max that out to you?
This is a very touchy subject. So it depends on how you got rid of the house. If you still own the house and you refinanced it, it's called a one-time restoration. So we see this a lot whenever somebody's about to go into retirement and they're about to move into their forever house. So they've had a VA loan in the past, they refinance it into conventional, they do a one-time restoration so they get their full entitlement back, and then they don't have to put any money down on the new home. The catch is if you ever want to use it again after you've used up your entitlement, you have to sell all of the properties that you used to get a VA loan, even the one that is now a conventional loan. If you come into a large sum of money, let's say you win the lottery and you pay off a house that had a VA loan, you still acquired that home with a VA. So it's still kind of held up with your entitlement. They still look at that as a home that's used. So you would still use a one-time restoration because you still own that house in order to use that entitlement again. It's confusing. I get it.
It is confusing. It's complicated, but it's why we do the strategy calls. So,
right.
Because everyone's situation is very unique and different.
Correct.
All right, everyone, we have wrapped up our Q&A period, and in general, we are at time. I wanted to say thank you to Ashley for giving her time today to answer these questions. And I want to say thank you to everyone who's been here. We've consistently held over 100 students today. And I'm just really grateful for your time and your attention. We went through a lot of things. I think we first looked at buying versus renting and the concept of equity. We then looked at VA loan basics, and I'm telling you, we really scratched the surface of VA loan here. This was not a VA loan deep dive. If you need to learn more about the VA loan and how it applies to you and your circumstance, I would love to talk to you one-on-one. Then we went through the 7 steps of home buying. That was build your plan with a strategy call, partner with a lender to find out how much you can lend, partner with a realtor who's got your back and can help you find exactly what you're looking for, shop and make offers. That was step 4. Then we were into inspections and appraisals and how that pans out, which is step 5. Step 6 was actually go to closing and know what's going to happen at the closing table. And all throughout this process, we talked about how to bring your cash to close down to 0, like every strategy, utilizing every strategy at your fingertips to get that down to 0. And then we talked about refinancing for lower interest rates in the future to make sure that you are consistently in the green on your investment and doing the most for your family financially. We answered about 30 questions for everybody here. So I'm going to recap right now. You are all invited to a strategy call. A strategy call is about 15 to 30 minutes where we kind of take a deep dive into what's going on with your family. You meet personally with the Military MLS concierge team. Everybody here has the opportunity to collect a $5 Starbucks gift card. So we're going to go ahead and drop the link to that now. So in the chat, Katie dropped the strategy call link, and then she dropped the gift card link. There is your coffee form right there. So your coffee form is where if you are still on this call, you're eligible to get that. It does get emailed out to you. We ask you to please give us a little bit of grace because it's a manual process and we do have a lot to send out. It does come from Starbucks. So before you email Katie and say, hey, I didn't get it, remember that it's coming from Starbucks. So you need to keyword search your inbox for the word Starbucks and then check your junk if you don't see it and your promotions folder if you don't see it. Then if you don't see it, you can reach out and we'll figure out like if we put your email in wrong or something. The other thing is, as a reminder, we do send out these awesome Stanley tumblers, flip straws to all of you who come to our strategy calls. So a strategy call link is above. And we invite you to come and enjoy that session, and let's get to know each other better and talk about what your next steps are. And then finally, you guys, we have a really cool Facebook group and a really cool newsletter that we would love for you to be a part of. So what was just dropped now in the chat is the Military to Military Property Club. That is the Facebook group. And whenever Cassie's sending out the newsletters, she also takes some of the highlights and puts them in the Facebook group. So if you're more of a social media person and less of an email person, you'll see it in both places. I think that's also a great place to pop a question in occasionally. If you're like, oh, something changed and I'd like some peer reviewed research on this, you can drop there. The cool thing about what's happening in that group is we've got investors of all different kinds and shapes. Like people who do multi-units are in that group, people who do buy and hold, people who do buy and sell. A lot of people are in there. And the other great thing is that it is a small group. So unlike VertForce, which has got like almost 100,000 people at this point, the Military to Military Property Club is like small, intimate, more conversational. And we are intentionally trying to keep it more peer-to-peer, small help. So go join. You can go join that group. The other thing I would say is keep an eye out for that newsletter, especially if you think an Earl is in your future, and watch those rates week to week. Last call for last minute questions before we hop off. I don't see any. I do see we've had almost 20 strategy calls booked. So I will be meeting with each of you one-on-one over the next couple of days. And I very much look forward to getting to know all of you personally. And thank you for supporting our journey with the Military MLS. Have a great day, everybody.
Thank you. Bye.
Bye. All right. I hope you enjoyed this episode of my Military Spouse Lifestyle Show. Reach out if you have questions. I'm always answering in the comments.